Welcome to our channel on accounting lessons with worked out problems. Brought to you by an experienced accounting professor with a CPA. We have videos on all topics of introductory financial accounting. Our focus is on step-by-step illustration of a problem, worked out on a whiteboard. Please do not forget to subscribe. In this video, we work out an additional problem covering the concepts learned in the lessons on journal entries and ledger accounts, adjusting entries, and the accounting cycle. This problem comprehensively illustrates the steps beginning with the posting of transactions in ledger accounts, preparing the trial balance, preparing the adjusting entries, preparing the adjusted trial balance, preparing the income statement, preparing the statement of retained earnings, and finally preparing the balance sheet. Let us begin the video with a description of the problem we are going to illustrate. Here is the comprehensive problem we will work out on the whiteboard. You may want to print this problem on paper or display it on another screen for reference, while the problem is being worked on the whiteboard. This page shows the required deliverables for the problem.
We are going to start the transactions. We are going to cover lesson number 2 first. I'm going to post these transactions in the T accounts. First transaction, owner invested $50,000 cash in exchange for common stock. So you go to cash T account, you debit cash for $50,000, and then you go to common stock T account and credit common stock for $50,000. Next, the company purchased office supplies for $4,000 on account. So you debit supplies for $4,000 and you credit account payable for $4,000. Transaction number 2. Number 3, signed a lease for office space and paid 3 months rent, $6,000 in advance. So the company is paying in advance, so this would be a prepaid rent. So you will debit prepaid rent for $6,000 and you will credit cash for $6,000. Number 4, provided services to client for $6,000 cash. So the company is earning revenue. So it's provided the service, so this would be a revenue. So you debit cash for $6,000 and you will credit service revenue for $6,000. Number 5, provided services to another client for $12,000 on credit. So here you will debit accounts receivable for $12,000. This is transaction number 5 and you will credit service revenue for $12,000. Number 6, it received cash from a client in advance and the service will be provided over next 3 months until August 10. So here the company is receiving cash in advance. So it owes the customer the service, which is a liability. So here, number 6, you debit cash for $6,000 and you will credit a liability account, unearned revenue, credit $6,000. Number 7, it paid for the purchase of office supplies. So it purchased on account, so it's paying it off. So you debit accounts payable $4,000 and credit cash $4,000. And number 8, paid $4,400 salary to the employees. So this is an expense. So you go to salary expense and debit for $4,400 and you credit cash for $4,400. Number 9, collected $8,000 from the client from transaction 6 above. So the transaction 6, it should be transaction 5 above. So here the company is collecting the cash from the receivable. So you credit accounts receivable 8,000 and you debit cash 8,000. Number 10, it purchased office equipment for $8,500 on account. So here an office equipment is an asset. So you go to equipment and debit it for $8,500 and you credit accounts payable $8,500. Number 11, it paid $800 for telephone and $1,200 for utility. So total utility expense you debit for 2,000 and then it credit cash for 2,000. Number 12, it paid $2,000 towards the purchase of office equipment. You debit accounts payable 2,000 and credit cash 2,000. So now we have entered all the transactions for the month of June, and now the next step is to prepare the balances in each account. So now in cash account the balance would be 51,600. Office supplies, the balance would be 4,000. Prepaid rent, the balance would be 6,000. Common stock, the balance 50,000. Accounts payable, the balance would be 6,500. And accounts receivable, the balance would be 4,000. And service revenue, the balance would be 18,000. Unearned revenue, the balance 6,000. Salary expense, the balance 4,400. Utility expense balance 2,000 and equipment balance 8,500. Okay, now we have calculated the balances in every account. So the next step is to prepare the trial balance. So now I'm going to erase the board and I'm going to put up the trial balance. Okay, here trial balance. So here so these are the accounts, and this is the debit side and this is the credit side. So now we are going to list all the accounts from the previous illustration, And now we are going to put down all the account balances. First, cash 51,600. Accounts receivable 4,000. Supplies 4,000. Prepaid rent 6,000. Equipment 8,500. And now this equipment is going to have depreciation, so I'm also going to put the accumulated depreciation would be 0, and then account payable 6,500, unearned revenue 6,000, common stock 50,000, service revenue 18,000, salary expense 4,400, utility expense 2,000. So finally you add up the totals, and the total in the trial balance is 80,500 on the debit side and 80,500 on the credit side. Okay, so now we have illustrated the concepts we learned in lesson 2. We posted the transactions in the T account. We calculated the every account balances, and then we prepared the trial balance. So next step would be to prepare adjusting entries. And adjusting entries, that is from lesson 3. And adjusting entries, we are going to prepare the adjusting entries on this column, and then we are going to prepare the adjusted trial balance. So now I'm going to prepare a column for adjusting entries. Again, we are going to have a debit column and credit column. Okay. So first, if we go to the next page, so here the company is going to prepare the adjusting entries on June 30. So first information for adjustment is the depreciation for office equipment was $70. So what do? We go to depreciation expense, and in the adjusting column we enter $70, and then you go to accumulated depreciation and you credit it for $70. Next one, supplies used for June was $800. So the company used up the supplies. So now you go to supplies expense, enter it here, and you will debit it for 800, and then you will credit the supplies 800. And amount of the prepaid rent used up is 2,000. So remember, they had a prepaid rent, they paid it in advance. Now 1 month has passed, so they have used up 1 month of the prepaid rent. That will be rent expense. You debited it for 2,000. You go to the prepaid rent and you credit it for 2,000. Last one, it provided $2,400 worth of service to the client who paid in advance. So when the company is now performing the service which it owed, so you will debit the unearned revenue for $2,500 and you will credit the service revenue for $2,500. Next one. So these are all the adjusting entries, and then I'm going to prepare the adjusted trial balance. So here again we have the debit side and the credit side. So here cash is not involved in the adjusting process. So here the cash adjusted trial balance is 51,600. Accounts receivable did not change, 4,000. Supplies decreased by 800, so the new balance is 3,200. Prepaid rent decreased by 2,000, so the new adjusted balance is 4,000. Equipment stayed at 8,500. Now the accumulated depreciation is $70. Accounts payable stayed the same, so 6,500. Unearned revenue, it decreased by 2,500, so the new balance would be 3,500. And then the common stock, no change, $50,000. Service revenue, it increased by 2,500, so the new balance will be 20,500. Salary expense stayed the same, so that would be 4,400. Utility expense stayed the same at 2,000. Now we have depreciation expense for 70. We have supplies expense 800, and we have rent expense 2,000. Now we calculate the adjusted trial balance total. After all the adjustment, the debit total is 80,570 and credit total is 80,570. Okay, now this is chapter 3. We prepare the adjusting entries and we prepare the adjusted trial balance. Now next we go on to chapter 4, where we are going to complete the accounting cycle. So from the adjusted trial balance, we are going to prepare the income statement, statement of retained earnings, and then we are going to prepare the balance sheet. Now I am going to erase the board so that we are going to prepare the financial statements, income statement, statement of retained earnings, and balance sheet. First, the income statement. We are going to start from the adjusted trial balance. So here we have service revenue 20,500, and then you go to your expenses. You have salary expense 4,400. You have utility expense 2,000. You have supplies expense 800. You have rent expense 2,000, and then you have depreciation expense 70. So total expenses, add up all these numbers, you have 9270. You subtract this number from the total revenue, that gives you your income. Your income for the month of June is 11,230. Next, we are going into the statement of retained earnings. So here, statement of retained earnings. So here, the retained earning as of June 1st, 2023 was 0. Remember, that was the first month of operations. To this, you add your income, will be 11,230. Now, the company did not pay any dividends, so there's no dividends. So now that gives you your retained earning balance as of June 30, 23 will be 11,230. Now, the next step is to prepare the balance sheet. Okay, again I'm going to erase the board. So, this retained earning balance of 11,230 will be carried over to the balance sheet, and now we are going to report in the balance sheet the assets, liabilities, and owner's equity. So now, the balance sheet. First, as of June 30, 2023. First you go to the assets. First you list all your current assets. Okay, you have cash, 51,600. Accounts receivable, 4,000. Supplies, 3,200. Prepaid rent, 4,000. So total current assets equal, you add them up, it comes up to 62,800. And then you go to your non-current asset. You have equipment, 8,500, less your accumulated depreciation 70. So that gives you 8430. So your total assets equal this plus this, 71,230. Now you go to your liability section. So first, liabilities, you list your current liabilities. You have account, payable balance 8,500. You have unearned revenue balance 3,500. So total current liabilities would be, accounts payable would be 6,500, so total 10,000. Now the company does not have any non-current liability. So here, your total liability will also be equal to 10,000. Now you go to your owner's equity. You have common stock 50,000 and your retained earnings 11,230. So your total equity equals this plus this, 61,230. Now your total liabilities plus your owner's equity should equal your total assets. Your liability is 10,000, equity balance 61,230. So total comes up to 71,230, which is equal to your total assets. So we have finished everything in this example. So this video, you can use it as a refreshment for your lesson 2, 3, and 4.
In this video, we worked out a comprehensive problem covering the concepts learned in the lessons on journal entries and ledger accounts, adjusting entries, and the accounting cycle. We hope the video helped you to understand the steps from the beginning to the end of the accounting cycle. We have video lessons on all topics of financial accounting. Please do not forget to subscribe. We hope to see you in another video lesson. Thank you for watching.